Hey everybody, it's Clayton again, coming back with a new video. Looks like we have another week and another downturn when it comes to the market. Again, I've said it over and over again, if you're a dividend investor and you've got a long time to invest, there's just nothing really to panic about. But in this video, I really wanted to go over the Democratic House's proposal that they were going to introduce with this stimulus package, how the Dow has been doing. And unfortunately, there is a few stocks, and it's going to be plenty more, unfortunately, that have cut or put basically a freeze on their dividends. I really wanted to go over that, but I kind of focus on the Dow. Again, gains are negative as expected. Market hasn't done anything and haven't put any new purchases in since the last video. It looks like this week, to start Monday, we got up to about 20, almost 21.7, but since then we're already down almost 12%. So it's been another one of those weeks, and it doesn't look like today's the 22nd. It's 7 o'clock right now on the East Coast, and tomorrow doesn't look like it's going to be much better to start. I was looking at the pre-market trading, and we're already at the limit down. So we're at 5%, meaning, as you can see with the Dow, we're at 954, NASDAQ's at 340. Unfortunately, what that means is any trading prior to the market opening is frozen until the market opens tomorrow at 9:30 Eastern. That's not usually a good sign. Every time we've seen this thus far the last few weeks, as soon as the market opens, it hits the 7% freeze and it shuts the market down for 15 minutes. So tomorrow probably looks like another big day of losses, but I'm no stock analyst. I'm just doing it from what I've seen recently. And it's kind of unfortunate to keep seeing the market go down. But like I've said for everybody that's a dividend investor, this is just your time to continue to dollar cost average. I'm going to say it every video, dollar cost average, and slowly put more and more into the market. And don't throw everything you've got in there now. So as we were talking about, obviously, prior to this pre-market freeze, we're at 19,173, which sadly is the lowest we've been since December of 16. But now with the Dow already dropping 954 points before even opening, at the point of the market opening tomorrow, we are going to be down to, as you can see, 18,086, which is back to May of 16. So everything's been wiped out for the last 4 years. And it's unfortunate, especially for anyone that's got looking at their 401ks. But for dividend investors such as myself that's young, this is just a great opportunity to get into the market, especially for those people that did this back in 2009 that got to see all the benefits. Now, with that being said, as could be expected with the market crashing the way it had, or crashing, let me put that in air quotes, the market falling as the way it has, you're starting to see companies slowly coming out that are suspending their dividends. And one example is Boeing. Boeing suspended their dividends as of Friday. And this one isn't really that much of a surprise because of what's been going on with Boeing. They obviously are having problems because nobody's making the planes, no one's flying, but they've had a lot of other stuff that I don't hold Boeing, so I haven't gone into it. If you are a Boeing shareholder, you probably know all about with the plane crash and how they've mismanaged this whole situation. But other companies that have cut or froze are Ford, also did it the other day. And it's basically being projected and expected that Chevron's going to do it, and even Exxon, which Exxon to this point is still a dividend aristocrat with 37 years of growing their dividend quarter after quarter or year after year. And it's going to be, I wouldn't say weird to see them cut it, but it's just unfortunate that aristocrats can go down. But I think there's going to be plenty more through this that are going to cut their dividends. And usually I say that you need to sell a stock once the dividend is cut. But for this situation, I'm going to look at each stock I hold on a case-by-case basis. Like an example, let's go to my portfolio. Excuse me. When I go to my holdings, let's just talk about AT&T. AT&T I went over in an earlier video, which I'll tag up in the corner right now. AT&T was one that I really liked the future for AT&T. What is going on right now with AT&T isn't going to affect the future, in my opinion. The 5G that they're pushing towards, the acquisition of HBO isn't going to be affected by what's going on right now. Everybody's being affected by this. Now, Carnival, on the other hand, very well could have a long hill to climb when it comes to getting themselves back where they were before. Disney's another company that, yes, right now everything is frozen. Parks are closed, cruise lines are closed, movie theaters are essentially completely closed as well. So the only way they're getting revenue currently, besides some stores online, is through Disney Plus. They're going to be another one that I think once this all washes over and they'll be rebounding relatively quickly. Excuse me. So you have to take each by a case by case basis and see if one, this virus is really going to cripple that company. And for cruise lines, it may. I still like Carnival. I'm just not investing anything right now. I'm sitting on the sidelines with them. I'm not going to be selling Carnival if and when they likely cut their dividends, because I think they'll be back stronger than ever. But they're not one that I'm expecting to see the dividends stay. I'll be shocked actually if they do. Same goes for the banking system with JP Morgan, excuse me, and Wells Fargo. But we'll see. I'm expecting a lot of my companies to cut their dividends, and then I will go case by case and kind of look at their just where they stand financially and their balance sheets and stuff like that to see if they are somebody I should hold on to or someone that I need to get rid of, because there's more than just this virus that has caused this problem and caused them to cut their dividends. But one thing I really want to dive into, and we kind of touched on this last video, and now we're kind of getting the workings and the details exactly from the members of the House and Senate. Obviously, there hasn't been anything worked out. They're still voting. I think they're actually voting right now, and by the time this video goes live, they may have already voted to either accept or decline proposals. But basically, everybody's bouncing ideas back and forth. And I'm going to post this in the comment section because it's a really good breakdown of the Democratic members, what Democratic members want to propose. And two things I want to focus on specifically here. There's one that can look at, I guess, as a good thing as an investor, and one that worries me dramatically. But number one, you could see at least $2,000 a month for all adults and $1,000 for each child. Touched on this last time when I was saying about $1,000, $500. Again, there's no set amount, but it looks like the government's goal from both parties is to give checks to citizens to stimulate the economy. It may help. I don't think it saves the markets, honestly, because nobody's going out right now spending money because of what's going on. But we'll see. For someone as myself, obviously, I've been talking about emergency funds, and to me, if you don't have an emergency fund set up, you shouldn't be investing at all right now. That's where your money should be going, that and paying off debts. Once you have an emergency fund and once all your debt is paid off, then I think it's time to invest. Again, this is just me speaking. Entertainment purposes only. I'm no financial investor. And this money to us, my family and I, may very well just be something that's getting put right back into the market. So its purpose that they have, maybe its exact use for us. But I want to scroll down this list, and again, like I said, I'm going to post this in the description so you guys can read through it if you want to. But number 26 is a problem for me, and let me read it for you. So it looks like they want to temporarily ban on stock buybacks and dividends. So we've seen in the news, or you've probably seen, because I know I've seen it all over, how a lot of the airlines did a lot of stock buybacks and used up, I think I last saw it was 96% of their cash to do stock buybacks. And unfortunately now these airlines are out of money and they're asking the government to bail them out or to help them out. And that's what's upsetting a lot of the people in the market, a lot of in Congress and the Senate, because that money that they threw back in as stock buybacks could have helped them through this time. So they're talking about suspending stock buybacks. But the one thing that I saw, and obviously as a dividend investor, this is one that hits me close to home, temporary ban on dividends. And it shows, as you can see right here, this provision would impose a temporary ban on corporate stock repurchase activities and paying dividends until the impacts of the coronavirus on the American financial system have ended, to ensure that the companies are using their excess cash to pay workers, shore up their bottom line, and invest in the communities. So as a dividend investor, this isn't something I really want to read. But I'm not in this for the short run. It's a long run thing. If they pause or temporarily ban them, quote unquote, it's unfortunate because that's what I'm investing in is dividend stocks. But I'm not looking to take money out today, tomorrow, next week, next year, 5 years from now. So if it's a temporary ban, that means they will be back. Obviously, they're not shutting down dividends, but it's still something I don't like to read as a dividend investor, that they're proposing a temporary ban on dividend stocks. That's just something that nobody wants to see. But I can understand why they're talking about it, especially the buybacks, because it's very hard to sell to an American consumer or investor that we've spent 96% of the cash we had on hand to prop up our stocks. Now please bail us out with your tax money. That's not an easy pill to swallow for a lot of people. And even for myself, I kind of hesitate on that. And obviously the airlines do need help, but it's like they practice. I don't really want to go into a political stance on this, but I'm not a fan of that technique. And I think that maybe it'd be smart to, if you do give them a bailout, they're no longer allowed to do buybacks, anyone that is bailed out. But I think temporarily banning buybacks and dividends for everyone would be a mistake. I think if you select who can and who can't, depending on who the government helps, that is more understandable to me, but just passing a temporary ban throughout the market, I think, is a mistake. But again, personal opinion, maybe you disagree. I'd love to hear in the comments below. And yeah, that's really the gist of this video I wanted to cover. I wanted to cover the proposal from the Democratic House. I wanted to propose or discuss the already pre-market stock trading that's already hit its limit down, which is unfortunate, and the dividend suspensions. More are going to come. There are plenty of stocks that you're probably holding that are on the risk or may even get suspended or lowered. Again, you need to go case by case and see why they lost it. And if it was simply just because of the coronavirus and you feel that what they were doing before the virus is sound and set and something that will be continuing once this is all passed, stick with this stock personally. Again, not a financial advisor, just an opinion. But I think that's the perfect time. But we don't know when this is going to end. Nobody knows when this is going to end. People are projecting weekly that it'll be done in a few weeks, a few months. Some are saying a year. Nobody knows. So as I said at the end of the last video, I truly appreciate you guys watching this. I'm going to try to get up more content. I want to be a lot more interactive with you guys because, like I said, I'm working from home and I've got some free time a little bit during the night, during the day, and at night while I'm kind of on slow times during the job. But I really do appreciate all of the feedback and support. I'm almost at 90 subscribers. I know it sounds like I'm kissing up every time I say it, but I really do appreciate all the love that you guys are giving and everyone sharing the videos. And if you're new to the channel or you just like the content, please feel free to subscribe, like the video. It helps reach more people, helps with the algorithm. And yeah, I really can't say enough to you guys. The market's been rough right now, but if you're a long-term investor, this is a market that you can look back on 10, 20, 30 years from now as when you took an advantage and started to grow your wealth at a young age, or even if you're older. It doesn't even matter how old you are. This is a time where you can start to grow your wealth once this market turns around, because a lot, if not every stock, is going to be at a good price. So be careful with everything going on right now. Be safe, and thank you to everyone that watched this video. Have a great rest of your day and a great evening.